will go and pick that inflation, which people expect to fall off a cliff, doesn't fall off a cliff as fast or as meaningfully as people want. And so I will explain inflation as 3 different chapters, and we've seen the first 2 chapters play out. So 2021, chapter 1 was all about energy inflation. And, we all talked about having almost $10 gas at the pump and what does it mean for everybody. And it caused that initial spike in inflation. And then we had it come off, and Sachs called this. He said, we're going to have this sort of double hump. And 2022 was really the story of goods inflation, right? All these prices and all of these things went up because the input costs went up, and we all had to bear the implications of that. But then that started to ebb. Now, if you looked at the tail end of 2022, what I found super interesting was the number of articles I saw about wage inflation. Whether that was Biden using an 1800s era law to prevent a railroad strike, the number of states that increased minimum wage, the trend around unionization. So in general, my thought is that the pendulum is swinging very markedly away from capital and towards labor. And as the labor participation rate stays low and continues to go down, and also it's compounded by an unemployment rate that may go up, right? It's going to be harder and harder to get people to do the work you need at the company you have unless you pay them more. And if that gets exaggerated, then inflation will stay where it is. It won't be as muted and it won't fall off a cliff as people want.
It'll be persistent.
That's my big contrarian wager for this year, is that
that is quite contrarian.
We see wage inflation that keeps inflation not going down as much as people want. I think that there's still a lot of uncertainty in the world and in the markets. And so I'm generally concerned that there's a lot of chop. And so I picked something that's pretty conservative, but I would have a combination of cash and the front end of the yield curve. So T-bills all the way up to 2-year bonds. So you can generate 4.5%, probably by the end of this year, 5% pretty safely owning this stuff while you wait for things to become more certain. And the way that I think about it is that I would rather miss the first 10 or 15% of a rally once we're really done with this stuff than try to overcorrect and try to pick a bottom, just because I think that you could lose a lot of money. So I think the goal for this year is to stay resilient and in the game. And so having a bunch of cash on the sidelines ready to pound it in. Meanwhile, a portion of it collecting 5% is not such a bad thing while you wait for the bottom. I think that if we've learned anything from the last 3 years, you have to separate the valuation of a company and how it performs in the stock market with its value in society. So for example, if you look at Zoom's valuation has cratered, but its value in society has probably continued to go up. It's still a massively relied upon tool. The point is that markets do not give you credit for the value in society. They will give you credit when you are about to over-earn, but then they'll pull it all back when they think that you're going to under-earn. So in that lens, I think that tech will have a tough year. I think energy will have a really shit year. And probably the biggest asset class that is going to get pressured is going to be junk debt. And the reason is a bunch of these variable rate loans, when rates are at 5 and 6%, that all of a sudden are like 11, 12, 13, 14% coupons. A bunch of companies will have trouble meeting their debt obligations and we'll have to restructure the debt or we'll have to file. So
who do you have, Chamath, for your biggest business winner of 2023?
I'm going to pick something out of my portfolio.
Mm-hmm.
I think I'm the only non-trivially large investor in both SpaceX and Relativity Space. Relativity Space has SpaceX is clearly just crushing on all cylinders. And they're really the only game in town with respect to launch capability. And if you just Google it, you'll see that the Europeans, have a hit or miss capability on launch. The Russians are completely unable to do launch now because of all of these sanctions. The private companies in New Zealand or the United States have also had fits and starts, really incapable. Relativity, which is now the second most highly valued space business, is about to do a launch in the third week of January. And the big difference between it and SpaceX, which is sort of why we did it, this is a early YC company. I did the Series A and kind of went along the whole way. They have 3D printed everything. And the reason why 3D printing is interesting is you take so if you think a rocket costs $5 billion if built by NASA, Elon was able to take that to 100 to 500 million. And if you 3D print everything, you can take that cost to like 5 to 50 million. And so it allows you to just have this repeatability and manufacturability. Now, SpaceX also has a lot of 3D printed parts, but Relativity is entirely 3D printed. It has a launch in 3 weeks at Cape Canaveral, I think. And we have a $10 billion order book that gets unlocked. So I don't know how to see beyond a lot of these market forecasts right now. So I'd rather pick a company. I'll pick something in my portfolio. If the rocket does not blow up, there's a $10 billion order book, and this company is now on a trajectory to be as valued as SpaceX.
Right,
and if it
talking
doesn't,
his book times 2.
And
well
if it doesn't, it goes to zero. Guys, what I was telling JCal is at the end of Q4, I did 5 deals. And 4 were pro ratas, 1 was a new deal. And they were all clean markups. So the 4 deals that other people put money into. And I was looking at them and I was trying to figure out, okay, what differentiates these things? And Freebird, to your point, these were super clean startups with very clean cap tables that had clear progress. And then conversely, I had 7 converts showed to me for companies whose valuations were anywhere between 3 and I would say 12 billion. And I did none of them. And not only did I do none of them, nobody else did any of them. And the problem was the real market clearing price was 80 to 90% down. And so I was like, what is going on here? So Freebird, to your point, I don't even think it's just cash intensive startups. I think it's like all growth companies are in a really bad place. I thought that this growth stuff would get sorted out in 2 to 3 months. And now I'm worried it's 2 to 3 years. I think it's toxic. So let me tell you my biggest business loser.
Yes, please.
I think that the biggest potential business loser this year is Google search.
Ooh,
as measured by pure profitability and engagement. I think it's easier for me to see where the usage comes from as opposed to picking OpenAI or ChatGPT in terms of where the usage goes to. And the reason is because I think a lot of people don't still fully understand how machine learning and AI work, but just 30-second primer. There's 2 big buckets of work. There's what's called learning, which is how you learn how to make predictions. And then there's what's called inference, which is when you actually type something into the search box, you get the answer. The thing with learning and what ChatGPT is showing is that they have learned by crawling the entirety of the web. There are 5 or 6 other organizations that are capable of crawling the entire web in terms of cost, in terms of compute, in terms of the quality of the transformers and the quality of the AI. And so I find it easier to predict the decay in the quality of Google search as that much better than everybody else than I find it is to predict who will win, because I think that with enough time and money, Oracle, Microsoft, Google, the Chinese internet companies can all compete, Facebook. And so I think that you'll converge on the same training, which will lead to the same inference. And so I think consumers end up getting confused and will end up being able to get high quality search results from many places versus today. You would only think that Google is the only game in town, quite honestly, for most people.
Well,
so I think that
the statistics show that. Yeah.
Google could lose 10 or 15% of usage to all these other sites. And that may not make any of those sites that relevant, but it'll have a material, measurable impact to Google and Google's bottom.
What do we think could be the biggest business deal?
Easy. This one is
okay,
easy.
Chamath, go. Let's go lightning round here. Go ahead, Chamath, quickly.
Starlink will go public.
Oh.
SpaceX will cut and paste the cap table. And we will take that it'll be yummy and delicious. And my prediction is that the Starlink valuation will be at least half of SpaceX's current private market.
75 billion. Just for Starlink.
75 billion. It will be phenomenal. And I think the reason why is that I think in order for Elon to have complete financial flexibility and do what he needs to do, and he talked about this on our pod about the difficulties and the dangers of margin loans and all of that stuff.
Yes.
He's going to create breathing room for himself. This is the simplest and most obvious way for him to do it. It'll give him a ton of more dry powder.
Sure.
So I think that this is an obvious outcome in 2020.